Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Back the man, myth, the legend, Mr. Dan Bird. How you doing, sir?
Good morning. Doing well. A little tired from my week-long road trip.
Yeah, I hope you had a
Up
good
to.
time. We missed you on the channel. I had a lot of people ask when Dan Bird is coming back. So,
Oh, really?
yeah, fans are growing. Your playlist is being watched more and more.
Oh, good.
So I appreciate it. I appreciate you giving us some time each week.
Maybe I'll create a YouTube channel.
I think you should. I think you should. Absolutely. I think that'd be a very good idea. So what we're going to talk about today, again, we kind of remind people where we're at in the market. Again, check out Dan's playlist. He called 3850 as an important number months ago. We've hit it. We've tested it a few times. We have not closed below it. And some people look at the rally at the end of last week as of a rally. So, Dan, what is going on?
All right. So since you brought that up, let me share my screen here. You've got to let me share.
I've got to let you share. I knew there was something I forgot. Oops. All right. One sec. Share screen. You should have it now.
Okay. And first, this is my newsletter information. We'll get back to this in a minute because we're going to talk about this inflation thing.
Yep.
But if anybody is interested, I do this every weekend. I do it for my own purpose to study the market, and I send it out to friends and family, and now all of your YouTube listeners.
Yeah, this is something, folks, I look at every weekend. I spent 30 minutes going through his newsletter yesterday. It was you put a lot of amazing stuff, and even more importantly, the links that you put in. I don't think people realize the value in the links.
I agree with you. I'm not sure everybody takes the time to read the links, but a lot of people just skim it. Some people just read the cartoons at the top.
Yeah.
And that's fine. Again, I do it for my own use, but some of the links that I put in there is where I do my research. So I include that, and there's some pretty good information in a lot of those links. In fact, the one I think you're referring to was sent to me by a friend of mine, the guy that I visited at Lake Linganore. Or Lake Lanier, rather, outside of Atlanta. And he sent me that, said, this is what you've been saying.
Yeah.
I said, yeah, it's a lot more detail than what I've been saying, but yes, it's basically what I've been saying.
Yeah. So let's catch people up. Let's catch people up on what that is in reference to, in case they haven't seen your past videos.
Yeah. So let me first, since you mentioned 3850.
Yeah.
Let me go to a chart that I was going to start with here.
Okay.
And this is the S&P. This is my reversion to the mean chart. So this part in the center is the S&P. It's the highlighted layers here represent the average true range. So the darkest one in the middle is a one-day range of the S&P. And as it expands out, you get a 2 times the one-day range, and then 3 times the one-day range. So as you can see, getting to 3 times is a rare occurrence. That means it's really oversold or really overbought, typically when it gets to that level.
Got it.
But markets and individual stocks like to get back to the mean, back to the center. And the center in this case is this dotted blue line right here. So like you mentioned, 3850 I've been talking about for 3 months, ever since the beginning of the year, basically.
Yeah, and folks, he has a playlist. You can go back and watch the videos. He's been calling it for months.
Yeah. I mean, I actually was saying it could overshoot that and go down to 37, which it hasn't done yet, but that doesn't mean it won't.
Right.
But you can see here, this red one, and I can't change this to an arrow, unfortunately, but this arrow right here went below, just about touched 3850. I think it got to 3858.
Yeah, correct.
And then it went back up, came back down and went below 3850, which is this level right here, but never closed below it.
Correct.
And came back up, and that was the start of this current rally. So we're back up above the mean right now.
Okay.
And we're back up to this resistance line right here, which is 4150. We're right at that right now.
Interesting.
But we're still within 1 ATR. So we could, I think, very easily get up here to this red line, this red dotted line, which is the 50-day moving average.
Yeah, correct me if I'm wrong, but this is just one edge. Again, I'm not a stock guy. This is definitely your realm. So this could be totally bananas what I'm about to ask or say. Is it, I think the stock market naturally has a bias to up, meaning people like to buy things that go up, right? There are obviously some
Yes.
people that are shorting and puts and all of that. But I think naturally speaking, an uptrend is probably exaggerated more because people want to feel, I don't even know if that makes sense, but that's what I'm seeing.
No, in general, that's true. And a lot of people like to buy the dip as well,
Yeah.
right? That hasn't worked very well since the beginning of the year.
Yeah.
But everyone's looking for that bottom. Everyone's trying to identify the bottom. And even the news media, when we hit 3850 and then we hit it again and bounce back up, and we got back up to 3900 in three cases, 1, 2, 3, we got to 3900. And now we're starting to go up again. So even the news media is saying, yeah, that could be the bottom. The bottom might be in.
Yeah.
We're headed higher. I'm not necessarily convinced that's the case, but it could be. I think June 10th is going to tell us, frankly.
Yeah.
I think June 10th is going to tell us whether this rally is real or whether we are just in a bear trap. And we're going to go right back down, maybe overshoot the 3850. June 10th.
Yeah,
Don't forget that date.
Yeah, let's talk about June 10th in more detail, because I am seeing more and more people that I respect and knowledge and have followed for years in the hedge fund and money industry. And more of them are now saying what you have been saying. You've been telling us for quite a while that inflation is peaked. It is going to be rollover. And what that means for these people is they're basically saying, Michael, you're right. You got it right, Michael. 50, 50, 50. You called it early, blah, blah, blah. You got it right. But Michael, you're wrong about September. September is the next meeting. I still believe, and I'm free.
Actually, there's a meeting in June.
No, I know. So June, July. So I called
Right.
50 in, I think it was April.
Oh, okay. Gotcha.
50 in June, 50 in May, 50, whatever. 3 50s in a row is what we're going to get. I called that early. They're saying, Michael, you got it. But now what they're telling me is, Michael, you're wrong about September. And this is really what you've been telling me.
Right.
You've been telling me for quite a while, oh, you might be too bearish. Michael, I think you're wrong. You've been a lot nicer about it. Some of these guys give me, 4-letter word kind of stuff. And more and more people are saying that the Fed may either pause in September, or a couple of them are like, okay, Michael, maybe they don't pause, but they do a quarter and then they pause in October. And for me, it's all about June 10th. How can June 10th be so important to September? It really is. Do we have validation that inflation is going down, as you show here? Or do we go? I think if we go up at all from 8.3, even if it's just 8.4, I think there's no chance of a September respite. So let's talk about June 10th and why it's so important.
All right. That's a lot of stuff to cover.
Sorry.
Well, it's important because this peak inflation conversation has just sort of popped up in the last couple of weeks, ever since the last meeting, actually, when this data point started pointing lower right here.
Yep.
But in some cases, it is just a gut reaction. I mean, people were saying, oh, we need 1 point. We need 100 basis points.
Yeah.
On the next one. Jim Cramer, it's a good example.
Yeah, Jim Cramer. Yep.
Yeah, and there's been others too, but most of them want to sell stuff. They want to sell their great TV show or sell a newsletter. My newsletter's free, so I'm not trying to sell anything.
Yeah.
So fear sells in the media.
Yes.
And not just for the stock market, but everything. Fear sells. And you have to be careful about that. You have to understand it, first of all, and be careful about it. It's better to look at what the facts are telling you. And the reason that I've been saying this for 3 months now, and you can't see it on this particular chart here, but every time, the way the inflation numbers work is every time we add one to the front end, we drop one off on the back end. Okay. And all the way back in this area here, when inflation started to ramp up dramatically in September, as we're adding these higher numbers through here, we were dropping off numbers that were 1.2, 1.8, ridiculously low inflation numbers were dropping off of this chart. And that's why I was saying that peak inflation is going to be when all of those low ones drop off. And all we're left with is something that's more normalized for an average rate of inflation. 6.6 is not average, that's still high, but it's not as high as it's been in the past. And it's lower than 8.5.
Mm-hmm.
And look at that last number in December, 4.0.
Mm-hmm.
The point is, this rate of change is what we should be looking at, not just this number right here. So everybody was looking at these numbers, 7, 7.5, 7.9, 8.5. Oh my God, it's higher than it's been for 40 years.
Mm-hmm.
Yes, and the rate of change as a result of all these low numbers back here, the rate of change makes this chart looks like it's going to the sky,
mm-hmm.
right? But as we drop these low ones off and we start actually reducing these front end ones to lower numbers, the rate of change starts to roll over. Now, and this is about where I said it was going to happen.
You did.
Right
yes.
here. And
Yep.
I've been saying this for 3 months.
Mm-hmm.
So the last report showed it didn't show much. It's only 8.5 to 8.3, but it was enough to show a downtrend in the rate of change.
Mm-hmm.
Now, one data point does not make a trend. And I've been saying that over and over as well. We need 2 data points to identify a trend.
Mm-hmm.
And that's why June 10th is so important. June 10th will be the next data point.
I'm seeing lots of money line up with exactly what you've been telling us now. And it's an interesting decision because again, it could either be validation, I think, of takeoff, or it could be just a like if it doesn't show the trend, it doesn't validate the trend, it could be bad.
It could be really bad. It will be really bad if it doesn't validate the trend. It will be bad for the stock market. No question. So these 2 on the right are showing what this looks like based on these averages.
Okay.
Or these estimates, I should say.
Oh,
so all these numbers down here are estimates. These are not real because they haven't reported yet.
Correct. I got
These are estimates based on what Fannie Mae was projecting for inflation for the whole year, which is an average of 6.6.
I got
Fannie Mae has been saying that since the beginning of the year. All right, 6.6. So these numbers here are estimates that get this to 6.6. And as these get added, so if 8 is the next one in June, then these, I don't have to change anything, basically.
Right.
But this 8.5, then 8.3, I actually had this down to like 8.0 here. It didn't come down that much.
Right.
So I adjust all of these estimates to make sure it comes in at 6.6.
Got it. Makes sense to me. Yep.
All right. So I'm estimating 8. I don't know what it will be, but whatever it is, I'll change this, and this red box will move down 1 level, and we'll show the actual. And this chart will show the actual rate of change over here. This actually shows you the other 2. By the way, this wording down here in the lower left, I have not changed this. This is the same wording that's been in this chart since February. So in February, I was saying in April, the lowest 2 months will roll off. This will show inflation may have peaked.
Yep.
So this is the July to June numbers, including 2 estimated numbers.
Yep. And
then this is the December to November, which is the green part down here, which includes all of these estimated numbers. And that's what the chart will look like. Now, if it looks like this in June, or actually July, this is the June number, but July's report. And even if we get a good one in June, if we get 8.0 in June, everyone's going to be saying, see, it's confirmed, peak inflation. And,
yeah, so let's talk about that. Let's talk about that example. Well, and I want to do both sides of it because I think there's, so if let's just say it's 8.0 or below, so peak inflation is confirmed. I have 2 data points. Is it fair to say that the market is a coiled spring and will spring higher? You think?
Yes.
Now, what does that look like? Does that think technology, consumers? Is it everything? Is there some things that are coiled more than others?
We'll look at some of the relative charts.
Okay.
For technology. I think technology in particular will take off. But if the June 10th number comes in lower than 8.3, then I think the market's going to take off. I think it will end the year higher at an all-time high.
Say that again. You think so? What
It will end the year at an
What's-
all-time high.
What's the it? Is that the stock market?
The S&P.
So you think that? So again, I want to make sure I understood. So if June 10th comes in at 8,
Yeah. Or anything below 8.
or anything below, right? Basically confirmation of peak inflation. You think there's a good chance that S&P 500 ends at an all-time high?
Yeah. Close
Wow.
to 5,000.
And that is because the stock market is not the economy. Because obviously, I think the economy still has a long road ahead to kind of work through, but the stock market is not the economy, and this is an example of that. That's a pretty
Yes.
bold call, 5,000 or whatever it is. Okay.
Yeah. Or a high. I mean, 48.18 or something was the high
Okay.
that we hit.
Wow, that would be fun. So let me ask you this question. So this is your opinion. This is not financial advice. Blah blah blah.
That's
all
right.
that stuff.
Yep.
This is one wild guy's opinion on YouTube.
Right.
So what do you, because this is what you believe, do you spend the next 7 to 10 days building a little portfolio early? Do you wait for
Yes.
June? Oh, you do. Okay.
I'll start. I've already added a few things. I added AMD, which shot up beautifully last week.
Okay.
I've added a little bit AOSL. We'll look at some of these charts in a minute too.
All right. So you nibble early. Okay.
Right.
And,
So
and
you
then
might nibble, but at a minimum, get your watch list ready.
And then the other thing I know you do, and just in case you don't ever go all in, you ladder your positions.
Right.
You do this risk analysis, risk management, all the things this is all the stuff you were teaching me, right? Because I'm a gambler or emotional in the stock market, which is why I didn't do it for 15 years. So
position sizing is the key.
Yeah. Okay.
You don't go all in and with your whole portfolio and buy one stock. That's a recipe for disaster.
So the last couple of weeks, the answer has been, Michael, I'm sitting in cash. It's too crazy. We're getting closer and closer to June 10th. You see or are planning for validation, and thus you've started nibbling.
Yes. However, talking about the other side of this equation.
Well, let's do that in second video. I want to do that in case you're wrong, or it goes the other way. Anything you want to wrap up with what you're doing now to kind of set up, or we'll get to video 2. What do you want to do?
Let's see. So I talked about this right here.
You did. Yep.
So this is kind of confirming the uptrend. Actually, I'll show the VectorVex charts in this one, and then we'll talk about the other things.
Okay.
So I'm going to go through a couple of charts. This is VectorVest, which is something that I use quite a bit. It's a combination of fundamentals and technicals together. So it can identify good, fundamentally strong stocks. And they have a process for identifying the market itself, whether the market's going up or not, or whether it's validated. So this blue one here is the market timing indicator. There's a pink dotted line right here that represents 0.60. Anytime it's below 0.60, the market is extremely oversold and getting ready to rally. So you can see how long it's been below 0.6. You can also see that it is right here, it went above it 2 days ago.
Wow.
The one below it is the buy-sell ratio. So the number of buy signals versus the number of sell signals against the whole universe of stocks in the VectorVest portfolio. For this one, 0.20 is the severely oversold, getting ready to bounce and rally line.
Interesting.
And you can see it just went above that as well. Actually, it went above that Friday.
Okay.
So both of those are now giving buy signals.
Interesting.
All right.
Okay.
The pro trader timing, this is the DPO. This combines an envelope of the moving average, the 30-day moving average, which is the white line right here, and the detrended price oscillator. And I won't go into what that means, but basically if it's below 0, then it's down market, not time to buy yet. If it goes above 0, this is an early indicator that the market is ready to go. And I can turn on down here on the lower left, the DEW indicator, DEW. That's a combination of all these things that you see on the screen.
Okay.
And it will actually show you when that signal gets hit. So we had a sell signal back here on 4/11. April 11th was the early down signal from VectorVest. It has not given an up signal yet. And the reason is it has to wait for this to get above 0.
Got it.
That could happen as early as Tuesday. I said that in the newsletter, but this is the reason why.
Got it.
That could be as early as Tuesday. If we have an up market on Tuesday, this down signal right here is going to turn into an up signal like this.
Interesting. Okay.
All right. And then it will likely run for a little while.
Okay.
And then finally, this final one here kind of shows the moving average of the relative timing. Relative timing is a technical indicator of the momentum of the market. And you can see it crossed over right here. This first up signal right there, it crossed over. So all of these things are indicating, the last 3 days are indicating that we are ready, just about ready to give buy signals across the board. If you're really aggressive, you might have done it back here when it looks like it was going to cross. But if you're a little more conservative, you'll want to wait for this to cross over. And if you're extremely conservative, you'll wait for this confirmed signal to go from a confirmed down, which it is right now, to a confirmed up, which it hasn't done yet. This will take more time because the BSR, both of these have to be above 1, and the BSR is still a long ways from 1.
Got it.
You can actually see it over here. So this has to be above 1 before this is going to turn into a confirmed up.
Okay.
That's the most conservative level right there, confirmed up. But everything is pointing to this rally could be sustainable for at least for a little while. And the last rally that we had back here in March, we had a 2.5-week rally. Really nice rally right here. Everybody was saying that's it, the bottom is in. I wasn't saying that. I said this is probably a bear trap. So we had a nice rally, and then we came all the way back down here. This was a 2.5-week period for this rally.
So let me ask you a question about the setup. Again, I want to go back to, you're an investor and a trader sometimes, right?
Right.
Are you, like, you started nibbling? Are these trades, or was AMD like a long-term hold for you? You're trying to buy?
Yeah, AMD may be a long-term hold, actually. And AOSL is another one. That's this chart right here.
I don't know what that is. Sorry. Is that
this is a chip? This is a chip company.
Oh, it's a company, not
Alpha and Omega. Alpha and Omega, and it's a technology play, and it has a very low PE. So it's a very attractive, and it's one that a lot of big funds are in. It's just about to go above its 50-day moving average right here.
Oh, interesting.
And you can see it's the last 3 days. It's just gone, straight up from like 36 to 46 in 3 days.
Nice. Okay.
This has a very low PE, so it's cheap.
Yeah. Okay.
So that's one that I probably will nibble at. However, back to this right here, and my point of this is, if June 10th, so we got 2.5 weeks over here. We've just started this one.
Yep.
June 10th is 2 weeks away.
Yep.
Right.
Yeah,
we might get a 2-week rally,
right,
which will probably put us up here close to the 200-day moving average, 4,400, 4,450,
wow,
somewhere in that range.
Okay.
That could be a 300-point rally in a couple of weeks.
7% or so. Yeah.
Yeah. Or we could get to the 50 and bounce sideways, waiting for that June 10th report. But that June 10th report will make all the difference.
Yeah. Either we're spring loaded and we go from there, because again, the stock market's not the economy, or we have an uncomfortable conversation because inflation hasn't peaked.
That's right. And then we may break the 38.50 level if that happens.
Yeah. Well, let's talk about that in video too. Show your newsletter one more time, because again, it's something that lots of folks on my channel are now getting. Again, it's free. It's just an email. Laugh with the cartoons. And also you can read what I'm seeing, because I'm trying to become a better investor in stocks. Look to take advantage of stuff on sale this time, build some wealth with stocks, something I didn't do for 15 years. So breakpointtrading@gmail.com. Dan, in video 2, we're going to talk about what happens if we don't get validation. So that should be fun.
Yeah. And I'll talk about some individual stocks too.
Very cool. Thanks, buddy.